have this view that obviously the dollar is going weaker. Dollar is also the global reserve currency. That also means that, there is a lot of demand outside of the US for US dollars, right? Definitely from other countries, clearly from India as well. What do you think this does to the overall, the trade equations across the world in terms of the dollar weakness?
Well, I think the question, so the dollar has clearly been weak, but it's the pace of the moves that's also important. If the dollar weakens slowly over time, then the world can adjust to that. It's sudden moves that the world can't get used to. Now, that said, from an exporting standpoint, obviously it gets more expensive to export to the US if one's currency is rising relative to the US dollar. But because China and Asia are becoming such a global economic presence, that countries outside the US are therefore going to be less dependent on the US for their exports. And that China, India, Indonesia, Malaysia, Thailand will become bigger customers for them. And therefore, these countries will be less sensitive to changes in the US dollar. Now, if the dollar were to have a sudden decline, that would be a problem because foreigners own a lot of dollars. I mean, even though the percentage of foreign ownership of the US Treasury market has declined over the past couple of years from about 50% to now about a third is still a lot of money. So there would be a lot of capital loss on a sharp decline of the dollar on the foreign side, which then means that a lot of these countries would probably repatriate. On the other hand, a dollar decline would make US assets more attractive to foreigners. And foreigners maybe would be more interested in US assets if their currencies rallied compared to the US.